If you're still begging banks or friends and family to fund your deals, you're setting yourself up to stay small forever. Because while you're stressing over $200,000 loan with a personal guarantee, professional operators are raising 10 million, 50 million, or even $100 million and beyond using a system that you've never even been shown. I'm Tarek Musa, and I spent years at BlackRock where we managed trillions of dollars and used their exact framework to raise over $1 billion for real estate deals alone. And in the next 10 minutes, I'll show you the right way to raise capital, the institutional way, and why it's the only path to scaling real wealth in real estate. So let's start with something that almost nobody in real estate understands, which is that you're actually operating in two completely different capital markets, whether you realize it or not. On one side, you have the retail world, the banks, hard money lenders, even crowdfunding platforms. This is where everyone fights for the same limited pool of money, the same restrictive terms, and the same personal guarantees. Then there's a totally separate world that most operators never learn how to access, which is institutional and quasi-institutional capital, like family offices, pension funds, and high net worth individuals, basically groups with massive amounts of capital actively looking for qualified operators. And here's the crazy part. The barrier to entry to these groups isn't your net worth or your connections. It's simply whether you understand how these two markets operate and which one your current approach is positioning you for. I've literally watched the same deal get rejected 10 times in the retail world and then get millions of dollars in funding from an institutional source without changing anything except the approach. Now, once you understand those two markets exist, the next big shift is recognizing how differently institutional money behaves. Most operators think that institutions are slow, bureaucratic, and impossible to access. But in reality, when you approach them the right way, they will move faster than anyone. How else do you think deals with a 30-day deadline get done? Or how else do you always hear about institutions suddenly scooping a deal out from underneath other competitors? You see, institutions have capital quotas that they must deploy. So they aren't hiding from operators. They're actually hunting for ones who look like they can actually handle real money. Their due diligence isn't about nitpicking your property or your credit score. What they want to know is, can you operate like a professional and can you manage our capital responsibly? That's why you'll see operators with decent, but not even spectacular deals get funded immediately, while operators with great deals get ignored because their systems and their presentation look amateur. But institutional capital flows towards capability, not collateral. Another thing that most operators don't realize is that the words you use instantly signal which market you belong in. If you talk about rental properties, then you sound like a retail operator. But if you talk about income producing commercial assets, you sound more like someone who belongs in the institutional world. You see, institutions don't invest in deals. They invest in alternative assets, inflation hedges, yield strategies, each tied to a specific portfolio need of theirs. So instead of saying, I found a great apartment building, you shift to something like, I've identified a stabilized multifamily asset with consistent cash flow and built-in rent escalations. It's the same deal, but different language. And suddenly you're speaking in terms that portfolio managers actually understand and utilize themselves. Quick pause here. Check it out. If you're starting to see the difference between raising money the hard way and raising it the right way, then don't guess your way through this. I put together a free strategy session where I walk you through the exact steps that real operators use to get funded using actual investor equity without banks or personal guarantees. So if you want to do deals the right way, click the link below this video and let's chat. Now back to the video. So let's bring all of this together, because once you understand the two markets, how institutions think and how they speak, the last piece is how you present your opportunity. The first thing you want to do is lead with a portfolio solution, not the property. Show them the allocation problem you're solving before you ever talk about the asset itself. Next, highlight your operational systems before your projection. Institutions want to learn about your processes, your team, and your ability to manage capital, not just what a spreadsheet says that they could read for themselves. Then, you want to address downside protection right out of the gate. Retail investors love hearing about upside potential, but institutional investors, they want to know, what happens if things go wrong? How do you protect my capital? And after you've done all that, finally, position yourself as someone who can deploy capital across multiple deals and not just a one-off opportunity. Institutions have a constant need to put capital to work, so they want scalability and a pipeline and not just a one-hit wonder. This is the exact sequencing that the biggest firms like BlackRock or JP Morgan use, and it's why operators who adopt this approach consistently get funded while others get ignored. So everything you just learned is the difference between hoping someone funds your deal and knowing exactly how to raise capital the right way. This is just one of the approaches that we teach inside of money raising school so that operators can finally scale without stress stress, without begging banks, and without personal guarantees. That's what we help operators and fund managers do inside of Money Raising School. So if you're ready to raise capital with confidence instead of stress, then click the link below and book a strategy call. And if you want your next step right now, watch the video on your screen of how to start a real estate fund from scratch, step by step. It'll show you how to take these capital raising principles and apply them to a fund the right way.